The micro, small, and medium enterprises sector was one of the worst affected due to the COVID-19 pandemic. The Union Government of India has announced a number of measures to counter the challenges posed by the pandemic. In addition, it also came up with measures that structural issues like changes in the definition of MSMEs or setting up of funds to infuse in MSMEs. However, access to credit continues to be one of the key challenges faced by MSMEs. Currently, digital lending is estimated at about 1% of total lending in India, as against 15 to 25% in the United Kingdom and the United States. It is time to maximize the potential of fintech to meet India's small business credit needs. Moderating this panel, we have with us Mr. R. Narayan, Founder and Chief Executive Officer, Power2SME. Mr. Narayan is joined on the panel by Dr. R.K. Singh, Chief General Manager, SIDBI, Kumar Shekhar, Vice President, Member Operations, Diet India, Ram Gopal Subramani, Chief Operating Officer, Perfios. Over to you, Mr. Narayan.
Hey, thank you so much for having me here on this program today. I warmly welcome all my fellow panelists who have joined me here. MSME, as she already said, has been affected pretty badly. And, if I look at the upper pyramid of MSMEs, I think the bottom 20-30% could have got wiped out. The numbers will get confirmed. The impact per se as a percentage on the economy might be very small, but the number of units is pretty devastating. So, we'll discuss some of this with our panelists. The government of India launched Atmanirbhar Abhiyan to support the economy. How helpful has the, ECLGS scheme and other credit guarantee schemes been? In your organization, are smaller players who are getting sanctions, or only the large stakeholders getting the sanctions, sir?
So SIDBI is a DFI, Development Financial Institution, and we manage both the guarantee institutions. So one is CGTMSE. If you see their outstanding, it is around 2.58 lakh crore guarantee they would have extended. And within that, if you see, 69% has gone to MSCs, or you can say for loan amount less than 25 lakh. Coming to ECLGS, which is channelized through NCGTC, out of 3 lakh crore, which is NYSEs, 2.52 lakh crore has been deployed. And within that, we were seeing the data, 51% has gone to MSME in number and amount. So from that count, I think infusement to this segment is a good way going. And other things, if we, like she had mentioned about the digital lending part. And like SIDBI pioneered PSB 59, SIDBI was the strategic lead. We did it with all public sector banks coming together, invested in a startup, and it has covered 3.5 lakh loans to the extent of 83,000 crore. And it is like a mother fintech, which is giving enabling environment to almost 18 fintechs who are onboarded out there.
Right.
And through that, we are easing out the journey. Same, just to give one more example, we also power Mitra portals, Udemy Mitra and Stand Up Mitra. So anybody up to 10 crore loan can apply and access any bank in India through the portal. And we also powered PM Swanidhi program, the street vendors, 10,000 loan. And see, within a short period, 25 lakh plus loans have gone to street vendors of an amount 10,000 rupees. So, and the second cycle has also started. So I think a lot of enablers are being built around. You would have seen in the budget, the hub city, gift city was also announced. SIDBI has also set up in IIM Lucknow, we have set up a center which is working on fintech startups.
Great.
So these are the quick enablers.
Yeah. Great. So those are some key insights, from Mr. R.K. Singh. He's from SIDBI, so he actually has a close look at the flow of funds and the number of units getting it. So that gives us some deep insight. What about you, Mr. Shekhar, on the Atmanirbhar thought?
Sure. Couldn't agree more than what Mr. Singh just said. And I will tell from my perspective, couple of years back, if you see, I think there was not much awareness around this, like the credit line on MSME. But with these yojana, so many Mudra Yojana, employment generation, credit guarantee, which has come in, I think the awareness to a certain extent is there. And almost like credit guarantee scheme, the target what government took, I think 85% dispersal is there, which is, I will rate it like it's a great success, right? And in any way, the government ensures that they give it a push. The rest is ecosystem, how it perceives, how the ecosystem is built around. Specifically, if I talk about Tide, right? What it does, it's a company which only, or it's a fintech which only focuses on SMEs, right? And they are there to solve the pain areas, what generally this small merchant goes through. And what we perceive that the problem, right, of MSMEs across the universe, across the globe, it's same. Mm-hmm. It's not different in India, it's not different in UK. Everything is similar kind of, like there is a credit need and they face challenges in that. And being a fintech, we think that we can fulfill or come up with the solutions which can actually remove these pain areas. They should ideally focus on the business, what they love to do, and nurture the power and unleash the potential of their business rather than, I will say, wasting the time in banking and the non-value add admin works, where Tide fits in. Comes with like core banking accounts, be it a business saving account or a current account, and then periphery, they provide a lot of services, for example, like taxation, carding, credit builder platform, which is backed by a lot of artificial intelligence, machine learning, and data analytics. And we will talk as we proceed in the discussion more about that. But this is how we see that the awareness from these government schemes has really worked well. And the fintech like us is into it to solve as a whole.
Sure. So, so we saw one part of the journey with SIDBI, which is managing and disbursing the funds. The last mile we saw from Mr. Shekhar, which is from Mr. Shekhar of Tide. Now I'll get to the enabler, Mr. Ram Gopal from Perfios, who has enabled this digital journey. So what are your thoughts about Atmanirbhar?
Yeah. So basically, see, I think a lot has happened in the last year. The government programs have been very successful. If you look at we work across all financial institutions, whether they are fintechs like Tide or it is the SME lending fintechs like a Indifi or a lending card, and also with all the banks. And incidentally, even for PSB 59, right? We are the engine, some parts of the engine which we power for PSB 59. So what we have seen is at an overall level, if you look at the number in terms of the loan with the amount disbursed, it is 40% higher in FY21 compared to FY20. Okay. Obviously, the first 6 months was kind of bad in the last year, but then after that, the recovery has been much more good. At an overall level, the SME lending, through our platform for the cigarette, saw a 22% increase overall. And the other aspect which we saw was the lending by financial institutions, banks, right? The large banks to the smaller segment was much more higher, actually doubled between FY20 and 21. So and when you talk about this specifically when you look at the micro and the small lenders, right? Which is basically looking for a loan of less than 1 crore or up to 10 crores. In those segments, as low as even a lakh loan, right? So that is where we saw a much more higher penetration. And at the overall number, in the micro and small, the rate of growth in between 21 and 20 was around 7%. So from that perspective, the credit guarantee scheme and the other mechanisms really helped. And also the fact that there was also one more major shift, which we'll talk to as we proceed. We saw more and more digital lending happening on the SME segment, okay, much more higher as compared to the past.
Thank you for your thoughts. So, there was a larger pool of money, first 3 lakh crores, and then that got enhanced to 4,50,000 crores. So, there was larger money, so the lending would grow. And we have all the people on this panel agreeing that, there were more people who got helped by both the schemes that the government launched, and so more power to the government there. So, in your opinion, how has the implementation of cluster-based financing helped the MSMEs?
So, you see, there are different type of clusters out in India. If we categorize, there is industrial clusters which are there. Then there are artisanal clusters which are available. Maybe the thrust for fintech segment could be on the certain artisanal clusters which are not able to access finance maybe. So now there would be 1,200 around clusters on industrial side. 2,000 clusters around the handloom, handicraft and others. And SIDBI is trying to attend to the cluster requirement from hard infrastructure side, where we have set up a fund with support of RBI and government, which is Cluster Development Fund for hard infrastructure. Then we also take care of the soft infrastructure in terms of skilling, upskilling, reskilling, market connects, technology, energy efficiency. And third is the financing part. So like SIDBI offices cater to around 600 clusters across through its direct lending. And through partners, I think we are able to reach out the entire segment. We find that the way fintechs are evolving, they are developing niche in a certain sector, subsector, and pocket or segment-wise niche they are developing. There are fintechs which are concentrating on the ecosystem side. For example, GEM is like a fintech which is catering to ecosystem getting evolved. Amazon is another example. Maybe it evolves in the way it is. So, and cluster financing is the solution, because MSME per se, they reside and grow in clusters. So cluster, because you can replicate your say model schemes, programs faster in a cluster mode, and it can spread also, and you can leverage the learnings also subsectoral level. So for example, if you pick up a leather cluster, maybe you can quickly shift the learnings to other leather sectors. So that way, I find fintechs can play a good role if they tap to start with artisanal pockets which are there. Yeah.
Sure. Thank you for that. Mr. Shekhar, I mean, is your approach to customer onboarding is also cluster based? What are your thoughts about cluster based?
But not really that. That will be the only one aspect, right? It's a one piece of information, but very critical, because what we struggle with is primarily a profile of MSME, right? And if the profiling gets correct, then obviously everything falls in place. So I personally look cluster financing as enabler. The first is like government coming in, creating all the infrastructure, so that one form of cluster, what Mr. Singh was talking about, can actually get nurtured there. For example, you take Ludhiana, which is known for clothing, bicycle, Surat, we all know for diamond, then Bharuch for petroleum products. So that's why there are many clusters in India as well. And obviously it's more than 1,200 or maybe 1,500. But if I compare it with our neighboring countries who are well advanced there, it's at a different scale. So yes, the entire cluster financing helps the fintech and then all the players in this financial ecosystem to read it correctly. And it becomes one of the data points which makes the journey easy to read the profile. But for overall growth of the MSME, I think this is a phenomenal concept. And I was reading in one article where Uttar Pradesh government was driving like one district, one product. Amazing, right? If I talk about Bihar, if Madhubani can be developed from an art perspective, nothing wrong with that. Varanasi, in again, the silk and sarees. So that way I see it will be fruitful for both. So fintech will come and plug all those things, and this data will be very handy.
Sure. And the government can put the infrastructure around it and make it a big enabler.
Yes.
Mr. Ram Gopal, your thoughts?
Yeah. See, I mean, I think to a large extent, this started in 2015-16 with the whole fintech evolution, right? And what they started looking at was cluster-based lending. If one of the first cluster to tackle was the sellers on the e-commerce platform. So where players like Lending Card and then Capital Float and then later on Udaan tried to basically give revolving capital to the lenders, the sellers on this platform, right? The other cluster which was very also focused was the Kirana, right? Now, here again, so one of the distinct part of these some of these clusters is that the capital requirement is not very high. Okay, and so which means that so like just to give an example, right? A Kirana store needs 75,000 for 90 days, like what Mrs. R.K. Singh was earlier talking about, the street side vendors being given some amount of 10,000 rupees. Now, for some of these capitals to be given such small amount, right? It doesn't behove for a large bank. The cost of acquiring, processing, all things very high. So, which is where this has to be largely technology led, and which is where some of the fintechs who came into this part started addressing this challenge. So, which meant that it worked towards financial inclusion. And what we see this will continue to increase more and more. And now you also have players like the payment players like a Razorpay or a Pine Lab and others, right, who are also extending the payment infrastructure to lending. So that is the trend that we've seen. I mean, beyond the traditional clusters of basically in terms of textile, leather, okay, even in terms of tea estates, right, tea farmers in Darjeeling, okay, right. So which is what it is. We are seeing the trend that in some of these areas where there is a much more localized cluster. So interestingly, there are programs where if there are medical shops near AIMS, there is a separate focus program to finance them. So here again, I see the more and more emergence of micro clusters and players catering for them specifically.
That was deep. I mean, those were some deep insights. Thank you very much for that, Mr. Ramgopal. So let's talk about the infrastructure now. Like if I look at the last 3-4 years, and I manage an NBFC myself. The kind of lending that would happen 5 years back because of the data opacity that was there in the country was, pretty much a large part of it was like that. But over the last 3-4 years, with the implementation of GST and so much more data being available both in the banking and other sectors, whether you see all the portals that the governments have enabled, etc., there is a decent amount of data infrastructure available, kind of stuff. So how does that support lending, and has that helped being a force multiplier in lending to this segment?
Yeah. So like we were mentioning about PSB 59 itself. When we launched it in 2018 November, we leveraged the GST data, the income tax data, and then bank statement being virtually available. So the journey which used to be thought of reaching months was converted into in principle sanction in 59 minutes. And that is what is the leveraging power this gives. But if we come to the data sets, now credit information companies are there, the GST itself, the GEMS itself, having now creating a pool out there. Then we have Jandan accounts itself, 43 crore Jandan accounts are there. A lot of unorganized enterprises are there. Some of the microfinance are evolving and moving up the next level, which is the micro enterprise. And so I think there is a good database with the MFIs also. Fintechs themselves have evolved a good database. It is only, and now payment companies also have, but the thing is, the way robust mechanism of CICs has evolved, where the data sharing happens. If data sharing starts happening, I think we can leverage these databases more.
Much more.
And I think then competitiveness would come more
Along
in this segment. Maybe it brings down the price.
Absolutely.
Also.
The MSME needs to see some light in the day there too.
Yeah.
True. Mr. Shekhar, your thoughts?
Yeah, so a couple of points from my side, right? One, yes, from data poor to data rich. Now this is what we all say, keep on. And most of the startup which is happening is primarily actually mining the data and converting that data into information and then trying to solve a very key critical problem which person now the consumer is going through. And they are making use of the data, right? Take any startup and they are doing the same thing. Particularly to the credit side, right? Again, I will divide this into two aspects. One is which is organized, where we have a lot of data already available for that person. For example, you, me, everyone will have certain credit history, right? There will be a credit score easily churned out, and then obviously person can take a call. That's a totally organized one where everyone has the history created. But the problem on the MSME is different, right? One, that MSME doesn't have that sort of data already created, right? And hence the banks or the formal bank financial structure is not very keen to lend them, right? And hence there is a credit gap which we are talking about today, right? But do they have other data point apart from the credit? The answer is yes. They have got a lot of footprint on a daily basis in terms of digital payments, in terms of social media footprints and others, which can be easily consolidated at one point and maybe mined to create information and then easily process what the need. At least you can do a proper credit assessment and then the limit can be decided, right? The major part here is primarily, I will say, the integration of this entire data flowing at one point of time and then solving the problem.
Thank you so much for that. Mr. Ram Gopal, I know this is one of your pet subjects.
Yeah. Yes. See, so like just to give you some data points, right? We work around across 200 client institutions, right? Banks, NBFCs, fintechs, in the country, and we process on average 20 million transactions a month, right? So that's the scale that we see. So and what we have seen is, see, like the part, right? Many of the MSMEs don't have credit history, so which means that you can't look at the bureau score to determine whether can you lend to them or not, which right. And the other part is also even the commercial bureaus, which is there for MSMEs, and things which have just evolved in the last 2-3 years in terms of serious adoption, right? So what happens is the performance then becomes a basis of what is the cash flow. So what we saw was largely this whole cash flow based lending, because the other part is in terms of income tax return. Yeah, you do provisional filing of your tax returns or GST returns. Also, you can basically do a summary return and then not give details. So with this, all these data becoming like your banking data being available and also your data coming from GST and other things, all of them being available digitally, right? We have seen a big shift, just like the way Mr. Singh talked about the fact that PSB 59 was able to lend, or basically do a disbursal in 59 minutes, right? We have now financial institutions, right, large banks and others, who are doing business loans, as high as 2 crores being done within 30 minutes, or like an Insta-OD product being given, which is in 5 minutes, right? And they completely rely on the data. The second part, right? In these smaller segments, what we have clearly seen is a shift, especially in the last 12 months, of the moving away from cash to relying on digital payments. So which is where even the smallest kirana shop, who hardly used to have a bank transaction as a bank statement, okay, would probably at the best have some deposits or withdrawal. Now their accounts are very rich, which means that this data becomes very useful to understand the footfall, right? What is the number of transactions being done? What is the average size? What is the repeat customer? Now, all these things, because a kirana shop will not have any kind of income tax filing or a GST return. Okay, that's the part of it. But then, which is where this data becomes very useful. Now, banks, lenders are able to judge on this and lend. So, which is where now the other part of it. Incidentally, I was just looking at the data on GST. What we have seen is the GST information or use of GST data in terms of lending is actually doubled in the last 12 months. So that's a significant increase in volume, and which is the part when assets, the overall filing of GST returns have come. Now you also have newer forms of data like the e-way bill, which is again coming in. So I would say clearly India has become really rich with data, and especially on the micro part of the segment, you are getting more and more transactional data. Okay, true. And the last element is as we go into this partnership with aggregators and things like whether it's an Amazon or Flipkart or even a Rivigo or a PharmEasy, right? You get business performance data coming from these channels. So which helps you to basically have a much more understanding of the business of the applicant and then have better decisions.
One thing I would like to add is I think the segment which needs a lot of attention is new to business. So, and the youth, if we are talking, and we are running one program which is Mission Swalamban, which is basically inducing youths to be job creators or job givers rather than job seekers. And if we are talking about, the skilling program also is slowly transitioning towards this side. And so we need to develop, I think fintech needs to have prowess on this segment, which has to evolve. And what are the alternate data points or which can be tabbed and which can, I think, ease access to this segment would be very crucial.
Sure.
Yeah, just to add,
Sure,
30 seconds, right?
sure.
Exactly what he's saying, right? So fintech, and especially I can talk about the tide, that we are committed for this, right? This new to market, right? We are not just focusing on the organized SME, but totally unorganized sector, maybe totally unregistered even. But the transaction profiling, if someone is doing the banking transaction, as Mr. Ramgopal was talking about, it helps you create those data, and then you actually know about them due to the transactional behavior, consumer behavior, in terms of the debit credit, you are able to judge it, and then you take a decision, which actually helps us to solve the problem of new to the market problem.
Sure. I am a living testament to the whole thing. I mean, if I look at the data and the usage in my own company, in my own NBFC,
Yeah.
I mean, we used to be running a much larger NPA before 16, 17, right? And after that, our NPAs have actually fallen to 0.1%
Yeah.
over the last 4 years, and over the COVID period, 0. So you get these early warning signals
That's correct.
about, when any SME is going down, looking at its GST data, PF data and all that. So you can really manage things much better.
Yeah, alert at right time can come.
Correct, absolutely early warning. But I have a counter question. I mean, I understand data is good and all of that. I also understand the infrastructure that the Indian finance sector in terms of the government has set up is phenomenal. On one side, you have TREDS, which is a phenomenal invoice discounting system, right? And if leveraged, this can actually completely remove the working capital requirement that is there in this country. It can make it 0, right? The problem I see there is that many customers are not there in there, and many MSMEs are not in there. But what we are also hearing actively is that even when MSMEs are there, they're actively discouraged from putting their customers' invoices in there, kind of stuff, right? So we have this infrastructure on one side, which has got all the things that can work for it. On the other side, you have an infrastructure which is basically GST and e-way bill, like Mr. Ramkumar said, etc., kind of stuff. So now, instead of leaving it to the whims and fancies of all the players in this system, to see who can get working capital, who can't, if we enable an automatic posting of the e-way bills and the GST bills straight on the TREDS platform and make it available, right, for all the banks, and every bank is hungry. They're all sitting with tons of money there, wanting to lend, and they can choose and lend against that. So, what is your thoughts about this whole thing? And one last thing I want to add to it is acceptance of invoices and TREDS is also an issue, right? You can put an invoice in there, but the buyer doesn't accept it, then it's just lying there, kind of stuff. So some form of automatic acceptance and things like that, has a way to just catapult us 5 years ahead. So what are your thoughts, and what do you think we should recommend, and what are your thoughts to the government?
I think already the TREDS have started working in this segment, because there was a standing committee which recommended also that if we do this automatic invoices getting moved to TREDS platforms, I think it would not only be the liquidity aspects which can be resolved, but you can track the payment behavior also.
True.
And how these are happening.
Which is the main problem. Most
Yeah.
customers don't want to go there because they don't want their payment behavior tracked. Yeah.
So, the TREDS are gearing up to that, and I think they are discussing also. Like SIDBI manages RxIL, so we have been tracking that. So development is there. I think it would be a very seamless sort of journey which will happen. Yes, it is. I think in COVID period, like we had set up one crisis responsive fund where we enabled MSME to onboard for free on these platforms. And we have found that within this COVID period, more than 13,000 MSMEs have onboarded on TREDS platform and have started doing transactions also in a good way. So traction is there. On the other side, you find few states also mandating their entities, PSUs, to go largely on the TREDS. and the way GEMS is also evolving. I think this integration aspect will soon be a reality, and so we will be leveraging all this.
Fingers crossed, looking forward to it.
Yeah.
Mr. Shekhar.
Yeah, not much on this topic. I will say, to me, it's a great concept, but the implementation has to happen in a better way, maybe, where more MSME can actually add up there. Based on one of the article I was going through, it says that to the initial target what the government took, only 33% is the kind of registration they have seen, or people coming up in terms of maybe the challenges can be they don't want to get the repayment to be tracked by anyone, or maybe anything. But it opens up an opportunity, right, where the fintechs are getting into, right, in terms of invoice discounting, maybe to the likes or not, but it can help to solve immediate cash flow problem. That's how I see it, but I think it to be a long journey, because it's not catering to all, right? At the moment, entire like 70 million MSME are not there, right? It's like long journey. I think it will be like less than 1% on that platform, to best of my knowledge. So it's going to be a long journey. But concept-wise, it's amazing, but it has to take a full shape.
Sure.
So just to add, it is being attended, see, in a manner like even 6.3 crore MSME were there. So the formalization part has started happening, where the Udyam registration is to happen. And I think more and more MSME go there, and then all these data sets get integrated. That is a
Utopian
which is invoices.
situation.
So it will happen.
Yeah, it will happen gradually. Till the time there is a scale, it will not make sense to anyone.
Sure.
But once scale
I get
is
your
there,
point. I get your point. Mr. Ramgopal.
Yeah. See, actually, I think there are two parts to it, right? One part is the challenge from a adoption perspective. So today what happens is, even if you're classified as an MSME, and if your customer doesn't pay you on time, right? The customer doesn't want that he probably wants the invoice to be reflected again differently, because he doesn't want to be penalized. So I think instead of looking at penalty, right, we should look at incentivizes. Just the fact is, if people have to share information, I mean, like even in terms of if you're asking businesses to periodically give information about their business performance, whether it is stock statement and all this, right? Now, if there are mechanisms which introduce to incentivize them, give them better rates or favorable terms, right, then there will be obviously adoption. So I think the first part is to solve the, policy part, to make it more attractive to people for you to use it. But at an overall level, I see that with the whole, on top of the whole NBFC account aggregator, right, we have actually built out the infrastructure for invoice-based lending. This is actually, the first of it was the GEM marketplace, which went live in the Q1 with several banks completely integrated to pretty much get the information from GEM, assess the customer, give them an offer, if they accept the offer. So which is here, the difference is in auction, right? Multiple lenders are competing for the same customer. So which means the customer is able to make a choice. And then based on that, based on the offer being accepted, an agreement and disbursement. And the entire process is distributed seamlessly. It's still very early days. I think the number of applications that have been processed is sub lakh in the last 3 months, but then it is a good step. In the same manner, the other element is also we are expecting the GST to come under the ambit of account aggregator. Now, once that comes under the ambit of account aggregator, there are already programs which are pretty much putting together banking and GST to come into together, so that again businesses, right, can pretty much be able to get revolving credit in a short notice. And all of this is built on the whole open credit enablement network. So the rails are in place. I think the only other part of the problem where ideally an integration between a threads and a GST would solve for is, GST does not today tell you whether invoice is hypothecated or not. Okay. Now, if this information is sitting with threads, and if these two systems can talk much more proactively, I think then you would be in the ideal scenario where access to capital becomes much more easier, and with all the technology frameworks in place, and with the surplus capital which are there with the financial institution, we should be able to leapfrog and probably give China a real competition.
good point to end that answer on. But I'm going to stick to this for one more round, okay? A large part of the problem seems to be lack of teeth, according to me. So if I give you an example and point is that in 2012, we came out with an MSME Act, which said that nobody in this country can delay an MSME's payment for more than 45 days, right? And it never said, if you delay, then what, kind of stuff. So while everybody was wildly excited that MSMEs are going to start getting their payment in 45 days, nothing changed on the face of this country, right? So, giving it to the best intentions of the buyer, seller, etc., it does not work. We've seen that clearly, right? Even if you delayed by more than 45 days, but if you cleared it on the 30th of September and 31st of March, you're a good guy, kind of stuff. So I see the similar issue, in terms of the GST and, getting that infrastructure, you've done 90% of the work. You just need some teeth in there so that people can't escape out of this network. I mean, GST is a brilliant thing that we did. We did so much of informal economy into the formal economy, etc. So don't you think we should be building some more teeth around usage of this and not leave it to the option of people?
I think, see, the Act has provided for facilitation councils, which are supposed to be working, and they have been working. I have been also in one or two facilitation councils where the issues used to come and they are tackled. But as our colleague he was mentioning, I think it is more of incentivized structure which should be in place rather than a mandatory or penalty aspect being there. So the more and more people realize the price discovery which is happening on the trades, or which is what is inbuilt out there.
True.
I think the market will evolve. And maybe once the market evolves, the compulsive aspect of onboarding would also evolve. I think so. That is how it is like a win-win situation which has to be conveyed both supply and demand side. And I think that is taking a bit of time, but it is there. It is visible. It should be working.
Yep.
Sure. On the note of optimism, Mr.
Yes. I will take it a little differently, right? If we add a little bit more teeth or regulation to it, yes, it can work. But generally, we have seen it doesn't work, right? Like litigation, arbitration, it can be anything. Or you put any regulation, ultimately it will result into certain dispute, which might not be the best way, right? And putting an incentive, yes, it's called for. But if we can get to a buyer score kind of methodology, right, it will act as a deterrent. Because now you're not saying I will penalize you, right? But you are saying you have a score, right? So that seller can know what kind of buyer you are, maybe. For example, most of the startup today does that, be it Amazon, be it Zomato, you cancel your order a couple of times, they will know what kind of buyer you are, right? That concept can be easily integrated out here, right? And you build a score like a credit score, a buyer score, and the problem is solved.
Yeah, so the only issue here, the slight difference is that we are doing all of this post-transaction, right? So the SME already knows the buyer. He likes it. He's in love with him. That's why he's selling to
That's
him,
correct.
right? He just hopes with folded hands that the money will come in time. This platform can just enable that.
That's correct.
Right? And actually what you're saying will happen because as the buyer keeps paying in time,
Yes.
automatically his rating.
That's correct.
Yeah.
So if that score gets built,
The
in
buyer is
future,
also
sellers are at
incentivized.
advantage, right?
True, very true. Mr. Ramgopal.
See, this may not be a very popular statement, but I think it should probably start with the PSU.
Started with PSUs,
Right.
but the adoption
I
has
think
still
that-
not happened. Yeah.
Yeah, no, I'm just saying the part is like a point which is there, right? So the aspect of bringing like so today you have this invoice reference number. If your turnover is more than 50 crores, you have an invoice reference number which gets embedded on your invoice which you send, right? So which allows you to reconcile between the invoice and the GST. It gets automatically updated in the GST system. In the same manner, when a buyer is making a payment, right? How do you track whether is he when for all the buyer score and all these elements to come in? You need to know the repayment behavior, right? And which is where, and a large part of the businesses which is catered for, the MSMEs, right? One is the private sector part of it, but then you also see a lot of it with public sector. Okay, so which is where I think across the board, if we just like the way we improved our ranking in terms of doing the ease of business and all this, right? We probably need another program which is to say what is the ease of getting your payments done and all those things, right? Maybe there's an objective that will help this thing go much more faster.
And yeah, I completely agree with you where, there might be some amount of reluctance in working with the government segment or with the PSU because of delayed payments, etc. This mechanism may actually give an impetus to the entire MSMEs to say that I am now very interested in working with the PSUs because at least I know when my monies are coming, kind of stuff. And that itself can act as an impetus for corporates to say that, I'm not going to get this vendors if I don't pay in time. So I think you make a good point, Good. Has the implementation of initiatives like government e-marketplaces accelerated the formalization of the MSME and adoption of fintech among them?
Yeah, I think there are a lot of SMEs, a few lakh SMEs, I was reading data, who have already onboarded on GEMS doing transactions, and it is increasing, the way it is increasing, in fact, in months it is adding lakhs now.
Somewhere I heard that what Flipkart managed to do in 6-7 years, these GEM managed to do in less than 2 years, kind of stuff.
So that I don't know, but I was tracking the data, which is the way it is growing. I think MSMEs are increasingly benefiting from this. And in fact, we find some of the artisanal clusters, the people with niche in handicraft, handloom also have started boarding and leveraging. Many things are becoming like PSUs are also getting conscious in terms of purchases. The benefits are going to accrue. I think it is all the way we are talking about the enabler ecosystem evolving together.
Yeah. That's correct. So similar view, right? These all are enabler, right? But at the end of the day, I will say to bridge this credit gap for MSME, ultimately everything has to come at one place so that you can read in detail about the MSME profile, and you make the journey of credit disbursement very seamless for them, paperless, with a lot of reach and speed. So everything acts as an enabler to me.
Mr. Ramgopal.
Yeah, just to add to what Kumar said, right? I mean, I would probably do a bit of crystal gazing and say that probably in the next 3 to 4 years, we'll probably have a kind of a data consortium, which will have all this information, which will help businesses, lenders, and all those things have a lot more efficient mechanism. Because like Udayam is doing a wonderful job. You have SIDBI, and SIDBI is doing amazing work, right? Whether it's a PSB 59 minutes or it's a MyMitra, or even the fact that they're going and doing all these, across the segment SMEs, right? Pretty much being registered. So there is some kind of an identification of this thing. Because some of these challenges are about establishing identity, establishing the presence of business. So I think then comes the part is, and just one more point, I kind of very moved to the whole lending part of it, right? Unlike payments and savings and other things, right? Lending is you're giving money away. So you need some confidence that you can recover the money. So the fact that during the COVID period, there was increased adoption of increased lending by financial institutions because of the credit guarantee mechanism in place. Countries like Malaysia, Singapore, and even some other countries in the Middle East have very clear credit guarantee schemes, which basically gives the impetus to businesses, for financial institutions to make the capital available. So I would say that is also another aspect where beyond the credit, it's a good step in terms of what has been done, but at a scale will give much more bigger impetus to all these initiatives.
The concept AF framework, which government is trying to drive, which is most talked about, like it will replace or it will be equivalent to the UPI kind of, can solve that data consortium problem, right? If it actually happens, where like you go to one lender and you are not asked any detail for, and the lender can see all the passbook, mutual fund, insurance at one place. And I think a couple of banks, the HDFC, ICICI, are getting into that to solve this. So if this AA framework comes, I think that problem will get solved maybe 2 years down the line. But yes.
Amen to that. Okay. In spite of being a credit deficient sector, the MSMEs still don't have prioritized access to non-collateralized loan. And they are seen as unbankable or high-risk profiles, right? How can fintechs bridge this credit gap and extend non-collateralized loan to MSMEs. I mean, even if you look at NBFCs today, the extent of non-collateralized loan is 25 lakhs to 35 lakhs. And MSMEs do need much more than that. So,
yeah, so I think that is happening also in a way, the cash flow based model evolving, or maybe scoring models tracking the sectoral, subsectoral behavior. I think, and more and more it gets honed up or refined. Now where like in the manufacturing services or trading, now trading has also come in the MSME ecosystem. I think the more and more learning gets into this, I think it will happen. Only thing is for the bigger loans, see it requires a different techno-commercial appraisal to be done in depth. So that is a different perspective. But for a smaller loan, I think this fintechs are, I think daily basis they are evolving with one or
so I think I left a gap in the question and I gave you an easy out on that one. So I'm going to make your life a little difficult. I'm removing retail and cash flow businesses from this business.
Okay.
So, you can't go to a ticketing agent because everybody knows what the... so I'm talking about to the manufacturing sector. We are talking about Make in India, Made in India, and Atmanirbhar and all. So, that is the thing that actually needs this non-collateralized loan, right? As working capital. I mean, they give plant and machinery and get their capex financed anyway. How do you think we can attack that problem?
So like say Mudra loans are on track on that count.
Very small. Right?
Fine, but that is, see, the starter is a small, not up to 10 lakhs. The people are able to also see the resilience builds up in that segment.
Yeah, at the bottommost segment, yes.
Yes, and you can see, like I will give you one example. We worked with around on promotion and development side, we kindled the Silai schools in villages and set up around 2000 Silai school spread across 5-7 states. And we could find that even in COVID period, these people were able to acclimatize faster and still sustained. So this segment is, it can be really powerful if it is handled properly, because it's not a one bout of loan cycle. They would be requiring regular, continuous.
Yes. Yeah.
And you see the microfinance also, that is how it worked. Maybe that peer group pressure or the tracking was so robust. So same way, I think the Mudra learnings helps banks to scale up to next level. Like I mentioned, street vendors, there was a lot of skepticism whether it will work. Now already the portal, we have started the second dose of the loans to this segment, because they could learn that bankability is so important. My behavior of payment, repayment is getting tracked, and if I have to evolve, I should be really remain bankable. So from that aspect, yeah.
In the interest of the time, I think the bell has gone. But
bell
I will say we start slowly, right? And then you build on that, right? And how the problem of this entire credit is getting solved by the fintech is based on the data, totally primarily. We try to make it paperless, which is a cumbersome process for the MSME. They don't want any collateral. They are want a less margin kind of game, where the formal banking structure struggles, right? They want like collateral, a lot of paperwork. But fintech, what it does, they use the data smartly. They use AI, ML, big data analytics, and then on the behavior and transaction history, they try to create their own trust score kind of for that MSME. And then you start small and then continues to build on.
Sure. Mr. Ramgopal.
Yeah, keeping it short, right? I think we're talking about MSME. I would say that fintechs being a vehicle of enablement, one of the aspects is a lot of the fintech financing has been equity, right? Now, but then obviously you can't put equity on a debt product, right? So and probably in the last 12 to 18 months, especially on the lending fintech side, there has been a lot of challenge in terms of finding capital. So what Mr. R.K. Singh talked about, the entrepreneurs and other things, right? Having programs to fund them, I think probably one good aspect to accelerate and make this process more accessible would be to figure out ways in which their funding of fintechs, for them to be able to lend to these segments, right? Where a bank or may not be very keen to address these markets would be a good step.
Thank you. I think we are running out of time here. So just one quick round we'll do. I still come back to that MSME pyramid. And I say that you've addressed through Mudra and other things at the lowest end, through the MFSI and all of that has been addressed, right? The higher end have strong balance sheets. So with collateral, without collateral, you're still willing to lend. When do we get to this, which is not the cream, but the milk? So when do we get to that? How do we get to that? And how does this data richness, do you think Trends can solve it? Something innovative. I mean, let's toss our hat in the ring.
No, Trends is, I think, that segment only it is addressing, I would say. Say at the bottom, they are anyhow, the way we could discuss, the cycle is faster, they are able to work in that segment. Yeah. But when they are supplying to bigger units, that is what MSMEs is doing that only. Yeah. M of upper level is quite good, the lower level. S is what maybe the ease of access is required there much more.
Very true.
That is why you see the CGT MSc is attending to MSc only. It is not to the upper
large ones.
Because we know that side is quite robust from that angle. So trades is a solution, the GST enabler, the GEMS, I think all these, the way the one point integrated system and with that robust data is going to solve issues out here. And more SME, the S part is realizing this, the more and more they are leveraging this.
Sure.
Yeah. Same here, I will say it's just a matter of time, right? You will have like a lot of data repository in terms of GST or GEM or maybe trades. A lot of data will be there, right? And then it will be much easier to assess someone and then go for the credit lending with a lot of confidence. So it's just a matter of time, it will get solved.
Sure. Mr. Ramgopal.
Yeah, just 2 words, embedded finance.
Yeah, true. Very true, sir. You want to expand on that?
Yeah, sure. So I would say that, the part is, obviously there are enough mechanisms like trades and all this, right? But the part is awareness is both in terms of the seller and buyer, is missing. Now, and the other part is just like the way in the consumer behavior, right? Your point of financing is gone to the point of sale. Now, if you're able to take the point of financing for the SMEs or the MSMEs, right, at their point of doing business, so that would be the way in which you're able to bring this whole, I would say, relationship. And also the fact is, to an extent, it is making the buyer responsible to get the suppliers onboarded on such platforms and then also have seamless integration into these systems so that the business performance is also something which is information which are going to the platforms, lenders and other things, for them to have confidence to be able to do a lot more efficient financing.
And the discussion has been so broad and vast that any effort from my side to sum it up will never be enough, right? So I close this discussion with a lot of optimism for the MSMEs on one side and for the fintech to make a difference in the MSMEs' life on the other side. We all agree that the infrastructure is in place. Some of us talking about teeth, some of us are talking about incentives, some of us are talking about ecosystem. Let's just hope that all of these comes together, and we sit here again in 2 years' time and talk about a very changed place. Yeah? Thank you so much, sir.
Thanks.
5 मिनट में अकाउंट सेटअप और ट्रेडिंग शुरू।
हाँ कर सकते हैं।
नहीं कर सकते।
लगी शर्त और हारा तो It's possible with CoinSwitch Kuber. Download करो और Bitcoin trading start करो. CoinSwitch Kuber. सिक्का चमकेगा.
Cryptocurrency is an unregulated digital asset, not a legal tender and subject to market risks and price fluctuation risks.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. Where there is life, there's always LIC. Zindagi ke saath bhi, zindagi ke baad bhi.